Hey everyone, welcome back to Corporate Decoder, the place where we take a peek behind the curtain of corporate speak and find out what is really going on. Today we are diving into T.S.S. Incorporated's latest report, and let me tell you, it involves some interesting financial maneuvers and a bit of borrowing. So what we have here is a current report filed by T.S.S. Incorporated, a company. Well, let's just say they are making some moves. You know how sometimes you need a little extra cash to get things done or to bridge a gap. That is sort of what this report is all about. This is essentially a notification to the public and the Securities and Exchange Commission, or SEC, that something significant has happened with the company. And in this case, what happened is they went and got more money. The company we are looking at is T.S. Incorporated, and they are based in Delaware. They are involved in some kind of business where they issue stock that you can trade on the Nasdaq Capital Market under the ticker symbol TSI. Now, let S get to the heart of the matter, which is what actually happened on the 17th of September 2025. T.S.S. Incorporated, through one of its wholly owned subsidiaries called VTC LLC, made a change to a credit agreement they had with S Bank. Think of a credit agreement like a really big, formal loan contract. This wasn't a completely new loan, but rather an amendment, which means they changed some of the terms of an existing loan. The original loan or credit agreement was for $20 million. On this September date, they decided to add another $5 million to that loan. So now the total loan facility is $25 million. They are calling this new part the incremental note. The exciting part here is that this additional $5 million is being used for specific reasons. The company states that the money will be used to refill cash reserves that were previously spent on capital expenditures. Capital expenditures are basically big investments a company makes in its long-term assets, like buildings, machinery, or in this case, maybe something related to expansion or upgrades. So they spent money on these big projects, and now they are borrowing more money to get that cash back into their accounts. The idea is to match the long-term nature of those investments with long-term debt financing, which, makes sense. If you invest in something that will pay off over many years, it's often wise to finance it with money you plan to pay back over many years too. It helps with cash flow management and avoids any short-term financial strains. This is really the main event of this filing. We don't see any big surprises like a new merger or a change in leadership detailed in this particular report. It is all about securing more funding through their existing banking relationship. The report also lists a few exhibits. We have the first amendment to the credit agreement itself, which is the nitty-gritty legal document detailing these changes. Then there is a term loan note, which is essentially the IOU for this new $5 million. And finally, there is the cover page information formatted for the digital filing system. So what does this all mean for TS Incorporated? Well, on the surface, it suggests that their capital expenditure plans are ongoing, and they have the confidence from their bank, S Bank, to extend more credit to support these plans. A $5 million increase on a $20 million facility is a significant boost, representing a 25% increase in their borrowing capacity under this agreement. This indicates the bank's continued support and belief in the company's future projects. However, we need to remember that borrowing money always comes with risks. While the terms are the same as the original loan, it still means more debt on the company's books. This increases their financial leverage and their obligation to make interest payments and principal repayments. If their capital expenditures do not generate the expected returns, or if the overall business environment becomes more challenging, this additional debt could put a strain on their finances. Looking at this through a Warren Buffett lens, you'd want to see if these capital expenditures are truly value-creating investments. Are they expanding into markets with strong demand? Are they improving efficiency that will lead to higher profits? Or are they simply trying to cover up underlying operational weaknesses with more debt? Without seeing the specific details of what these capital expenditures are, it is hard to say for sure. But the fact that they are using debt to replenish cash reserves suggests they might be experiencing a cash crunch, or that their growth plans are more ambitious than their current cash generation can support. This isn't necessarily bad, but it's something to watch closely. It could signify aggressive growth, or it could signal financial pressure. The company's shares are traded on the Nasdaq Capital Market, which is generally for smaller companies TS. Incorporated itself is listed as an emerging growth company, which means it has some regulatory relaxations. It is important for investors to understand that this filing is just one piece of the puzzle. To get a full picture, one would need to examine their financial statements, their overall debt structure, and their business strategy in more detail. In conclusion, TS Incorporated has secured an additional $5 million in debt financing to support its capital expenditure projects. This move shows continued access to credit and likely supports key growth initiatives. However, it also increases the company's debt load, a factor that requires careful monitoring. The company's direction seems focused on growth through investment supported by debt. The main risk is whether these investments will yield sufficient returns to service the increased debt comfortably. Alright, that is our breakdown of T.S. Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this is a smart move for growth or a risky bet? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord community linked in the description below, where we discuss these kinds of insights further. Thanks for watching, see you next time.